Good morning, everybody. Thank you for attending this Ichimoku Trading Strategies webinar. I am Charmaine Feria. I am a contributor at bukaka.com. I am known as Simple Trader. I will give you access to my charts after the webinars. I am a chartist and I have been trading the market for the last 10 years. Throughout my trading journey, I have tried many kinds of trading systems. I tried Elliott waves, technical indicators, Jarvis boxes, etc. All of these systems have their own benefits, but I find that the most effective among these systems that I have already used so far is the Ichimoku trading system. Today we have the opportunity and privilege to talk about the Ichimoku Kinko-Hayo, its different components, and how they come together to point you in the direction of profits. So are you a new trader who is looking for a system to begin your trading journey? Or are you an experienced trader but would like to learn new ways of making money from the market? Well, today that opportunity is yours. The Ichimoku Kinko-Hayo is a tried and tested strategy that will leave you asking, why have not I learned about this system earlier? So let's talk about what this course is all about. Ichimoku Trading Strategies is a webinar that is made for individuals who are interested in becoming more effective stock market traders. It discusses and applies the Ichimoku trading system that will guide the learner in finding a trade setup that have a higher probability of success. At the end of the course, the student will be able to find profitable trades using the Ichimoku trading system, determine the best possible price levels to enter and exit trades, maximize the profits and minimize losses, and build confidence in trading decisions. So what will you learn today? The Ichimoku trading system, its components, and the effective utilization of tools for more profitable trades. Part 1 discusses the system itself and the concept of equilibrium. Part 2 discusses the components of the Ichimoku system. Part 3 talks about the Ichimoku signals. Part 4 discusses the trading strategies. And Part 5 uses Ichimoku with other tools. So today we'll try to finish from parts 1 until lesson 3 of part 4. So let's begin. Part 1, Ichimoku Kinko-Hayo. So what is Ichimoku Kinko-Hayo? Ichimoku Kinko-Hayo is a trading system developed by a Japanese journalist named Goichi Hosada. He spent 30 years trying to perfect the system, then he released it to the public in 1968. Hosada believed that the market action is a reflection on the dynamic of human behavior. This human behavior is based on the human being's tendency to move away and towards equilibrium in their lives. The system had been used extensively in Asian trading rooms and successfully used in forex, commodities, stocks, and other markets. But it did not become popular in the West until 1990s. So it is only in the 21st century that traders are beginning to understand the power of this charting system. Ichimoku is a powerful trend-based technical analysis method. Through its different components, it defines supports and resistances, identifies a direction of a trend, assesses momentum, and provides trading signals. So Ichimoku is best used for trending markets and is not as effective for ranging markets or those in a sideways consolidation. Ichimoku or Ichimoku Kinko translates to one glance equilibrium chart. Ichimoku means glance, Kinko means equilibrium, Hayo means chart. So one glance at the Ichimoku chart will give you an immediate understanding of the sentiment based on where prices are in relation to the Ichimoku components. This chart, for example, shows a strong downtrend, and then it shows a strong reversal to the upside. These Ichimoku components warn us that this reversal was about to happen several periods ahead. So Ichimoku answers many questions. What is the market sentiment? Is the market bullish or bearish? What about the momentum of the trend? Is the current trend strong, weak, or neutral? It also provides clues on the strength of the buy and sell signals. Are the buy and sell signals weak, strong, or neutral? Now, the Ichimoku chart provides a clear picture of how current prices relate to past, present, and future price action. The Chikou span references current price action with the past 26 days. So we find that this chart is bullish based on the past, present, and future price action. Chikou span defined the support and the resistance. The Kumo defined the future price action. The Tenkan-sen and Kijun-sen tell you the supports and resistances in the present. So it is the only indicator that is both leading and lagging at the same time. So we will discuss all these more closely in the lessons that follow. Now let's talk about lesson 2, equilibrium. The markets are dictated by the law of supply and demand. When supply equals demand, it is in a state of equilibrium. But sometimes, the demand is higher than the supply for a particular market. When this happens, the price shoots up because the sellers are less willing to let go of their shares, while the buyers are willing to pay more to get hold of those shares. When this market gets disrupted in this way, you get disequilibrium. Now, as price goes higher, there will be less willing buyers. Then there will be a surplus in supply. Prices will have to fall in order to restore the balance or the equilibrium between supply and demand. When price goes back down, the demand increases and the supply decreases again as the market eats into the supply at these lower prices. As a result, we have equilibrium all over again. In this chart, we see that prices have fallen in order to relieve the excess supply. As prices fall, the market will also tend to demand a higher quantity. The market again falls into a state of disequilibrium. Now, if that demand ends up higher than what the market is willing to sell, then we get a shortage in supply. As a result, prices will rise, and as price moves higher, the demand tends to decrease while the supply increases once again. Eventually, the market will find the level at which the supply equals demand in order to restore equilibrium. So the market goes back and forth between the state of equilibrium and disequilibrium. This is the backbone of the concept of Ichimoku Kinko-hayo. Now, an important facet of Ichimoku is that it is based on a set of rules. You have to follow those rules so that you're able to trade based on a system. The discipline keeps you from being emotional about your trades. Many times traders jump into moving trades without any plan at all because they did not want to be left out. They start buying when everybody else is buying, and they buy at any price and then cross their fingers that it will bring them profit. But that is not the best way to get into a trade. That is not trading. That is pure gambling. But if you have rules to follow, you would not have to fall prey to that. So as a trader, we must look for that profitable trade with the highest rewards at the lowest risk. This means that we do not enter every single trade opportunity. We should discipline ourselves to only get into the more profitable trades. But you have to have the skills and the knowledge to find these profitable setups. As Aristotle says, what lies in our power to do, it lies in our power not to do. If there's anything that the Ichimoku can do for you that will have a profound effect on your trading, it is to eliminate the doubt. By mastering the Ichimoku system, you are the master of your trade. You are able to look into the past, the present, and the future direction of the market. As William Shakespeare says, our doubts are traitors, and they make us lose the good we oft might win by fearing to attempt. The Ichimoku system is a stand-alone system. However, some traders would add a few indicators like Fibonacci levels to add conviction to their support and resistance levels, or they might also use the relative strength index to find divergences. Nonetheless, the Ichimoku trading system could be used without any other tools. Ichimoku works in all markets: the stock market, the commodities market, the forex market, etc. Now, it could also be used in different time frames. However, the higher time frame always is more reliable than the lower time frame. The support and resistance levels on higher time frames like the weekly and the monthly time frames are stronger supports and resistance levels than the lower time frames like the daily and the hourly time frames. Now let's go to part 2, the components of the Ichimoku system. The Ichimoku system has 6 components that work together to form a complete Ichimoku picture. These components are the Tenkan-sen, the Kijun-sen, the Chikou span, the Senkou span A, the Senkou span B, and the Kumo. The Tenkan-sen line is the pink line in the make trade charts. Note that these lines may have different colors in other charts. What we will use for this webinar are the charts from make trade. The Tenkan-sen is the pink line. It is the conversion line or the turning line. It is calculated by taking the highest high plus the lowest low of the past 9 periods divided by 2. The Kijun-sen line is the blue line. It is also called the standard line or the baseline or the reference line. It is calculated by taking the highest high plus the lowest low for the past 26 periods divided by 2. The Kijun-sen line is a very important component of the Ichimoku Kinko-Hayo system. The Chikou span is the green line. It is also called the lagging line because it is the current price shifted 26 periods back. The Senkou span A is also known as the leading or preceding line 1. To calculate the Senkou span, take the Tenkan-sen plus the Kijun-sen, divide that by 2, and plot it 26 periods ahead. Now the Senkou span B is also known as the leading span 2. It is calculated by taking the highest high plus the lowest low divided by 2, calculated over the past 52 time periods and plotted 26 periods ahead. Then we have the Kumo. The Kumo is also known as the cloud. That's the shaded area between the Senkou A and the Senkou B. The Kumo is one of the most important elements in the Ichimoku Kinko-Hayo system. Alright, so let's talk about each component one by one. Lesson 1, the Tenkan-sen. The Tenkan-sen is the midpoint of the past 9 periods. So from the current period, we count 9 candlesticks back. And then we get the highest high. In this case, it's 685. Then we get the lowest low, which is 566 for that time period. Then we add those two numbers and then divide the sum by 2. So add 685 plus 566 and divide the sum by 2, we get 625. That result becomes a point in the line. Now the Tenkan-sen is just like a short-term moving average because it is a result of price averages over a period of time. However, it only takes the highest high and the lowest low and then gets the average of that. However, moving averages are an average of all closing prices within a specific time period. The Tenkan-sen is a fast indicator. It provides the short-term support and resistance. If price is above the Tenkan-sen line, the short-term bias is bullish. The Tenkan-sen also shows the strength of the short-term momentum. The steeper the slope of the Tenkan-sen, the stronger the momentum. In this chart, the line is moderately sloped upward. This shows moderate momentum. Now in this chart of M-wide, we see that price had gone below the Tenkan-sen several times. During these periods, when the price is below the Tenkan-sen, the short-term bias is bearish. However, since price is still above the Kijun-sen, then it is still on a medium-term uptrend. This just shows that the momentum is getting weaker. Now the Tenkan-sen is also used as a buy and sell signal. When it crosses above the Kijun-sen, it creates the TK cross signal. We will discuss more about that later on in this webinar. Let's do the Kijun-sen. The Kijun-sen is a vital part of the Ichimoku system. It is calculated at the midpoint of the past 26 periods. From the last day's candlestick, we count 26 periods back, then we find the highest high. Here it is 685. And then we get the lowest low. Here it is 488. We add these values and divide the sum by 2. So it's 685 plus 488 divided by 2 is 587. That's the value plotted on the Kijun-sen line. The Kijun-sen tells you the medium-term bias of the market. If the price is above the Kijun-sen, then the medium-term trend is bullish. In this chart of Jerry, price is above the Kijun-sen. Therefore, it is medium-term bullish. Now, if price is below the Kijun-sen, then the sentiment is bearish because it is below the midline of prices for the past 26 periods. In this chart of AP, we see a medium-term bearish trend. The Kijun-sen serves as the medium-term support line. Now, when an uptrending security consolidates and then bounces off its Kijun-sen line, this means that the medium-term bullish trend is still intact. The encircled areas are areas where price bounced off the Kijun-sen. So for swing traders, this Kijun-sen line is a good price level to buy into the market. But once price falls below the Kijun-sen becomes the medium-term resistance. Kijun-sen is also a built-in trend line. In this chart of SSI, the Kijun-sen acted as price resistance until April of 2017. Prices trended below the Kijun-sen line, but on May 2017, the price reversed. The price crossed above the Kijun-sen. This means that price is higher than the average of the past 26 periods and thus bullish. The result was a change in trend from downtrend to uptrend. The opposite happened in this chart. Price had been trending above the Kijun-sen line, and this line served as support for many weeks. Now the security was on an uptrend, and then prices went sideways, and then price broke below the Kijun-sen line. Now there's a reversal of roles. From a previous support line, the Kijun-sen is now the resistance line. And there's a shift in trend from uptrend to downtrend. From the previous examples, we learned that the Kijun-sen could be used as your trail stop for uptrending securities. The break below the Kijun-sen is a sell signal. The advantage of using the Kijun-sen line over trend lines is that it adjusts with market volatility. Unlike trend lines, which are merely straight lines connecting bottoms, the Kijun-sen is more flexible and is a more accurate trend indicator for prices. Now, the Kijun-sen tells you the medium-term momentum of the market. A steeper Kijun-sen line in an uptrend or a downtrend signals strong directional momentum. So the steeper the slope, the stronger the move. Now, when price enters into consolidation, the Kijun-sen becomes flat. A flat Kijun-sen shows low volatility over the past 26 periods. When the Kijun-sen is a flat line, it acts as a price magnet. Therefore, price would tend to come back to a flat Kijun-sen line. In this TD chart, notice how prices are away from the Kijun-sen line in this area of number 1. Prices were below the Kijun-sen. Now, in a downtrend where prices are low, demand increases. As demand increases, there is scarcity in supply, therefore price will increase due to this demand. In number 2, prices went on an uptrend. Eventually, there was excessive supply. The excessive supply happens when prices are too high that the demand at those prices decrease. It went on a sideways consolidation until Kijun-sen and price are able to meet. Currently at number 3, price is at equilibrium because it is attached to the Kijun-sen line. In this area, the Kijun-sen is flat and shows equilibrium. Lesson 3, the Chikou span. The Chikou span is one of the most underutilized yet more important components of the Ichimoku system. It is a time-shifted line because from the current closing price, you count 26 periods back to get to the latest point on the line. This helps us gain a clearer perspective of current price action with respect to the past 26 periods. Here is a current example. This is the chart for JG Summit or JGS. This is the current price. This is the price 26 periods ago. Now, where is the Chikou span? The Chikou span, is it above or below the price? The Chikou span is below the price. If the Chikou span is lower than the price 26 periods ago, that would indicate that there is potential for more bearish price action to come since price tends to follow trends. So JGS is likely to keep going lower. This was the bearish scenario that is highlighted by the Chikou span. Now here is the bullish scenario. This is the current price of EW. And this is the price of EW 26 periods ago. We see that the Chikou span is above the price. Therefore, it is bullish and is likely to continue trending up because price tends to follow the trend. Now, another function of the Chikou span is to define ranges. Let's zoom out of the FPH chart. Now, in every price chart, price tends to mark certain areas as its highs and lows. In doing so, it creates price ranges. The location of the common highs and lows make up the highs and lows of the Chikou span. So we just connect the common points to get a series of lines. Basically, if we're inside these Chikou span ranges, then we know we're consolidating. If price breaks above the Chikou span range, then we enter a new range. Now let's add in the lines in this next chart. So for example, you're in this price right now, the orange circle. Then we find the Chikou span 26 periods back. Where is the Chikou span? It's right here. It is right at the support line created by the historical Chikou span highs and lows. Since price holds above the support line but could not make higher highs above the Chikou span resistance, then we know we're in a range or we're consolidating. Lesson 4, the Senkou span A. Now the Senkou span A is used along with the Senkou span B line. Together, they form the Kumo, or the Ichimoku cloud, that is the foundation of the Ichimoku Kinko-Hayo charting system. The Senkou span A is another one of those time-shifted lines that are unique to Ichimoku. Now the Senkou span A is the average of the Tenkan-sen and the Kijun-sen line. We get the value of the Tenkan and Kijun-sen added and then divide that by 2. Then we plot the answer 26 periods ahead. So in this chart of SMC, the Tenkan-sen is at 103.2. The Kijun-sen is at 104.9. The Senkou span A is at 104.05. The value is plotted 26 periods ahead. Since it represents the Tenkan-sen and Kijun-sen, the Senkou span A is in itself a measure of equilibrium. Now the Senkou span A shows and measures the volatility of the market. This line will always be between the range of the Tenkan and Kijun-sen 26 periods ahead. This goes for the entire trend. So look at this Senkou span right here. It is right between the range of the Kijun-sen and the Tenkan-sen. So this area defines an area in the market where there is equilibrium. In this chart, notice how the Senkou span A plotted 26 days ahead or 26 periods ahead is right inside the range defined by the Tenkan and Kijun-sen. This is because Senkou span A is the average between those two lines. Senkou span A normally is never flat, while the Senkou B tends to be flat. Now, since price tends to trade off of the Senkou A and B lines on their own, now the real power comes in their combined dynamics or in the Kumo. In this Ichimoku chart, the Senkou span A is the blue line and the Senkou span is the violet line. These two in combination form the borders of the Kumo. Now lesson 5, Senkou span B. The Senkou span B represents the highest high plus the lowest low for the past 52 periods divided by 2. The lowest low for SMC over the past 52 periods is 95.5 and the highest high is 108. The Senkou span B is at 101.75. Now this value is plotted 26 periods ahead. On its own, the Senkou span B line represents the longer-term view of equilibrium in the Ichimoku Kinko-Hayo system. The Senkou B is more likely to be flat and is therefore a magnet to prices because it defines a strong support and resistance over a longer time period. Now, this Senkou B line measures longer-term equilibrium. So this lets you know the future potential. This is the slowest of all the components because it uses 52 time periods. So if price has not made a new high or a newer low for the past 52 periods, we will have a flat Senkou span B line. If price is not able to make new highs or new lows for the past 52 periods, then we will see a flattened Senkou B. And a flattened Senkou B is also a magnet to price because this is a long-term price average. So if you see prices hitting these Senkou B levels, it would be a very strong support level, and that could be a trade in itself. You could buy at this level and sell at the bounce. Lesson 6, the Kumo. The Kumo is the shaded space between the two spans. The location of the Senkou A and the Senkou B in the Kumo determines the market bias. The thickness of the Kumo defines the strength of the Kumo as support or resistance. When the Senkou span A and B cross, you get what is called a Kumo twist. Here's the Kumo twist for brown. A Kumo twist signals a change in sentiment. When the Senkou span B is on top of the Senkou span A, the sentiment is bearish. Now, when the Senkou span A is on top of the Senkou span B, the sentiment is bullish. Flat Kumo tops and bottoms are strong support and resistance levels. Often, the market comes and bounces off these levels and then goes the opposite way. Every trend starts with a Kumo breakout. IMI made a Kumo breakout and made an uptrend from then. If price is above the Kumo, we are bullish. If prices are inside the Kumo, you could not see what is actually happening because it is inside a range. You do not want to be inside the Kumo. You want to get above it. So do not take trades that are inside the Kumo. If price is below the Kumo, we are bearish. Here's the chart of FGen. Ever since price broke below the Kumo, it had been on a strong downtrend. The Kumo identifies the current and future areas of support and resistance. Remember that supports and resistances are not specific levels, but areas or zones. The thicker the Kumo, the stronger that Kumo serves as support or resistance. In this particular example, we see that prices are already inside the Kumo. Therefore, we expect prices to trade within this range. It also means that prices will have to work harder to break above this Kumo, and therefore the chances of a breakout are low. Now, if you have a thick Kumo, you expect high price volatility because the distance between the Senkou A and B is very wide. Therefore, price will try to oscillate between those two spans. The Kumo area is thus essentially a trading range. So prices will tend to go back and forth within that area, and that has no clear direction. Now, this is the chart of Ayala Corporation. For the past few trading days, price had been trending above the Kumo. However, from Wednesday to Friday, price had gone inside the Kumo. It had been trying to break above it, but yesterday, it closed inside the Kumo. Now, if price is above a thick Kumo, then we have a strong support area as shown in this example. Therefore, prices will have a hard time breaking below the Kumo due to the strong support. A thinner Kumo represents a weaker level of support and resistance. In this particular example, the prices of Pacifica had been trending above a thin Kumo. This means that that level of support is weak. So the thinner the Kumo, the easier it will be for prices to break below it. In this example for Pacifica, we find that the prices have already broken below the thin Kumo. Let's go to the signals that warn us of an impending change in sentiment. Part 3, Ichimoku signals. What are the signals that we could trade off of and profit from? Now, the Ichimoku Kinko-Hayo system gives you 5 kinds of signals. They should never be taken in isolation, but considered in the context of the overall chart and with regard to the relationships between all of the components, including the price. Remember that Ichimoku Kinko-Hayo is useful in assessing trend strength and trend reversals. However, trends can and do change, so your readings of the charts should be taken as a probability rather than as a certainty. Now, these signals could be classified as strong, neutral, or weak, depending on their location with respect to the Kumo. The strength of the signals could also be further strengthened, weakened, or nullified by the relationships between the other components. Now, when used in a non-trending environment, such as in a sideways trend, Ichimoku is likely to produce frequent conflicting signals. Now, here's the first of the signals, the Tenkan-sen crossover signals. This occurs when the Tenkan-sen crosses the Kijun-sen. These crossovers could either be bullish or bearish. A bullish Tenkan-sen crossover signal occurs when the Tenkan-sen crosses from below to above the Kijun-sen. When this happens, you buy. Now, a strong bullish signal is produced if the crossover happens above the Kumo. With a strong bullish signal, prices are likely to trend up on strong momentum after the crossover. Now, this is the strong bullish signal for MRC. At the closing price of 178, the Tenkan-sen crossed above the Kijun-sen. After that crossover, prices went up almost vertically to 238 and then proceeded to the 48 high. Now, a neutral bullish signal is produced if the signal happens inside the Kumo. This chart of Bloom shows a crossover inside the Kumo when the price closed at 633. Now, because the signal was neutral bullish, prices hesitated and retested the bottom Kumo and then made a strong breakout above the Kumo. A break above the Kumo likewise created a strong uptrend. Now, a weak bullish signal is produced if the Tenkan-sen crossover happens below the Kumo. P-Gold made a weak bullish signal when the Tenkan-sen crossed above the Kijun-sen below the Kumo. Now after this crossover, price moved sideways below the Kumo. It retested its support and then went on to break the Kumo. After the Kumo breakout, it retested the Kumo resistance, now a support, and then proceeded to make an uptrend. Now, notice how the stronger bullish signals are able to move on to strong uptrends after the crossover, while those with neutral or weak bullish crossovers have to consolidate or retest support before resuming its uptrend. This is why we should prioritize strong bullish Tenkan-sen crossovers over other setups. To summarize our lesson on Tenkan-sen bullish crossovers, a bullish crossover occurs when the Tenkan-sen crosses from below to above the Kijun-sen. A strong bullish signal is produced if the signal happens above the Kumo. A neutral bullish signal is produced if the signal happens inside the Kumo. A weak bullish signal is produced if the signal happens below the Kumo. Now let's talk about Tenkan-sen bearish crossovers. A bearish signal occurs when the Tenkan-sen crosses from above to below the Kijun-sen. When this happens, sell. This is the chart of tugs. It produced a bearish signal when the Tenkan-sen crossed from above the Kijun-sen to below the Kijun-sen. After this, prices dropped dramatically, and the price crossed below the Kumo, which confirms the bearishness. Now, a strong bearish signal is produced if the crossover happens below the Kumo. With a strong bearish signal, prices are likely to continue on a strong downtrend after the crossover. This is the strong bearish signal for BC. A neutral bearish signal is produced if the signal happens inside the Kumo. This chart of coal shows a neutral bearish signal when the Tenkan-sen crossed below the Kijun-sen inside the Kumo. This resulted in a weak sideways to downward movement after. Now, a weak bearish signal is produced if the Tenkan-sen crossover happens above the Kumo. In this chart of P-core, we see a weak bearish signal above the Kumo. This will result in some sideways movement thereafter. Now let's summarize the Tenkan-sen bearish crossovers. A bearish signal occurs when the Tenkan-sen crosses from above to below the Kijun-sen. A strong bearish signal is produced if the signal happens below the Kumo. A neutral bearish signal is produced if the signal happens inside the Kumo. A weak bearish signal is produced if the signal happens above the Kumo. Now let's talk about the next Ichimoku signal, the Kijun-sen crossover. The Kijun-sen cross signal occurs when the price crosses the Kijun-sen from above or below. A bullish crossover happens when the price crosses above the Kijun-sen line. A strong bullish signal occurs when the price crosses above the Kijun-sen while it is above the Kumo. The price of to-go broke above the Kijun-sen while it is above the Kumo. It resulted in a strong upward trend. A neutral bullish signal occurs when the price crosses above the Kijun-sen while it is inside the Kumo. Here's an example with Vita. Now, a weak bullish signal occurs when the price crosses above the Kijun-sen while it is below the Kumo. This chart of EMP shows that weak bullish crossover. After that weak bullish crossover, it moved sideways and found resistance below the Kumo. However, it was able to break above that Kumo and then proceeded to create an uptrend. Now let's summarize Kijun-sen bullish crossovers. A bullish signal occurs when the price crosses from below to above the Kijun-sen. A strong bullish signal is produced if the cross happens above the Kumo. A neutral bullish signal is produced if the cross happens inside the Kumo. A weak bullish signal is produced if the cross happens below the Kumo. Now let's talk about Kijun-sen bearish crossovers. A bearish crossover happens when the price breaks below the Kijun-sen. RFM made a strong bearish Kijun-sen crossover when the price broke below the Kijun-sen while it was below the Kumo. Dimple made a neutral bearish Kijun-sen crossover when price went below the Kijun-sen while it is inside the Kumo. A weak bearish signal happens when the price breaks below the Kijun-sen while it is above the Kumo. B price broke below its Kijun-sen, but it managed to stay above the Kumo. Now to summarize, a bearish signal occurs when the price crosses from above the below to below the Kijun-sen. A strong bearish signal is produced if the crossover happens below the Kumo. A neutral bearish signal is produced if the crossover happens inside the Kumo. A weak bearish signal is produced if the crossover happens above the Kumo. Now let's talk about our next topic, the Chikou span crossover. This is the third of the 5 signals. This occurs when the Chikou span rises above or falls below the price. Remember we said earlier that the Chikou span defines ranges. So if the Chikou span is able to break above the price range, then that's a breakout. It's a bullish breakout. If Chikou span breaks below the price range, then we have a bearish breakout. So here's an example of a bullish signal, a strong bullish signal. The Chikou span crossed above the prices in this PNX chart. Prices were able to break out and make a strong trend to the upside. This is a strong bullish signal because it happened above the Kumo. Therefore, there are no resistances to stop prices from going up. Now, a neutral bullish signal happens when the crossover of the Chikou span above price happens while the current price is inside the Kumo. When we say price is inside the Kumo, we're talking to the current price. Now, this current price refers to that crossover 26 periods back. So when that crossover happened, the price was still inside the Kumo. So this was a neutral bullish signal because you still have the Senkou B to break for a successful breakout. Now we have a weak bullish signal if the Chikou span crosses above the price while the current price is still below the Kumo, because it still has to break above the Kumo resistance. So this may or may not result in positive price action, but note that you still have to break the Kumo for a bullish breakout, for a strong move upward. Now here's your bearish signal. A strong bearish signal happens when the Chikou span crosses below the price and the current price is below the Kumo. So there's no support under that price. So this could break down because there's no Kumo supporting it. A neutral bearish signal happens if price is inside the Kumo. Notice that the Chikou span went below the price at the left, and at the right side, the current price is inside the Kumo. So this is a neutral bearish signal. A weak bearish signal happens if the price is above the Kumo. Boom's Chikou span went below the price. However, the current price was still above the Kumo. So that bearish crossover was invalidated and price made new highs. It's currently at the 9 peso level. And this bearish signal was invalidated because there's a strong Kumo to support the price. Now what's a Kumo breakout? This happens when price crosses above or below the Kumo. A bullish Kumo breakout happens when the price breaks above the Kumo. A bearish Kumo breakout happens if price breaks below the Kumo. Here's an example. A bullish Kumo breakout happens when the following conditions are met. Number 1, price breaks above the Kumo with a single candle. 2, price closes above the Kijun-sen. 3, there's a bullish Kumo twist. 4, the Chikou span is above the price. And 5, the Tenkan-sen makes a bullish crossover. So in this chart, we can see all the elements that we previously studied, all the signals together in one chart. In this DNL chart, we see all these bullish signals together while the price is above the Kumo. So this resulted in a strong breakout for DNL. So this is a bullish Kumo breakout. Now we have a fill web here. Now this is a bearish breakout for the Kumo. These are the conditions for a successful bearish breakout. So when we say successful bearish breakout, prices trended strongly downward. This will work well for traders who are able to trade downtrending markets or who are able to short the market, which is not available in PSE right now. Perhaps if you're trading the Forex, commodities, or the Dow Jones, or the Forex market, you will be able to find some use for this bearish breakouts, but currently, we are not allowed to short the market yet. As of now, we can use this as a signal to sell if we are if we are doing position trading in an uptrending stock. If you see that these bearish signals happening in your chart, then it's time to cut your losses. So first condition for a bearish breakout, for a successful bearish breakout, price breaks below the Kumo with a single candle. Price breaks below the Tenkan-sen. There's a bearish Kumo twist. And the Chikou span is below the price. There's also a Tenkan-sen bearish crossover. This is where the Tenkan-sen breaks below the Kijun-sen. And this is a bearish Kumo breakout because prices fell below the Kumo. Now, Kumo twist occurs when Senkou span A and B change positions. In this chart, we see that brown made a bullish Kumo twist. Sentiment changed from bearish to bullish, and the trend shifted from a downtrend to an uptrend. In contrast, Philex Petroleum shows a bearish Kumo twist. From a previous bullish sentiment, the sentiment is now bearish, and the trend had changed from uptrend to downtrend. Now let's do a case study on MCP, which is now called MRP. Now, let's imagine that we are way back in July 2016. Now, at this point, we have not heard of the Ichimoku trading system. In July 2016, we are at the start of the consolidation box for MCP, or Melco Crown Philippines. Since you have not used Ichimoku at that time, your MCP chart would probably have looked like this. You had the candlestick chart, you had the RSI and the MACD, you also had the moving averages. So in July 2016, you bought MCP at this price point because you saw that prices were making higher lows and that it had been making higher highs. However, in the following days, price stopped moving up and started to go sideways. You realize that you are stuck in this consolidation box. You have no idea where MCP will be going in the short-term or medium-term future. The moving averages gave 3 bullish crossovers. Now, a bullish crossover happens when the short-term moving average crosses above the longer-term moving average. In this case, the green line is the short-term moving average, and the yellow and red lines are the longer-term moving averages. We see that the green line crossed above the yellow and red lines. So this was bullish. Each of these bullish crossovers were buy signals within the box from July to October 2016. Now, each time it made that buy signal, you thought that this is it. This will probably resume its uptrend, and you will finally be able to get out of the trade with profit. Sadly, prices remained in a sideways motion for the next 7 months. Now, RSI also remained range-bound. The question on your mind was, until when will I have to hold this piece of baggage? Finally, after the long wait, MCP made a bullish crossover once again. Now here was the bullish crossover. This was number 4. You finally assumed that this will again be a false signal. You thought this was another one of those false signals, and you do not want to stay any longer, so you want to take this opportunity to get out of the trade at least at break even, and you felt a sense of relief that this crossover is happening. So shortly after selling, price broke out. You hesitate to buy back because on its price breakout, there was no RSI breakout. In fact, there was a bearish divergence on the RSI. Now, a bearish divergence is when price makes higher highs and the indicator makes lower highs. Normally, a bearish divergence tells you that the price move will not be sustained and there will be a price reversal to the downside once again. So this signal conflicted with a breakout. This was a bearish signal that conflicted with a bullish breakout. Now there's another signal that conflicted in this picture. There is also a bullish hidden divergence. Now a bullish hidden divergence happens in a trending market that signals that prices will continue to go up. Here's your bullish hidden divergence. The RSI made lower lows and price made higher lows. This signals a continuation in trend. So which is it going to be? Will the bearish divergence win over the bullish divergence, bullish hidden divergence, or the opposite will happen? So you're conflicted at this point. You don't know whether to buy despite the breakout, so you just give up on it. Since you don't have clear signals, you just let the trade go. In this confusion and hesitation, the MACD could not give clear signals as well. It went back inside, above and below the signal line went above and below the slow line. So you have no clear direction by the MACD. This might have resulted in whipsaws for some traders who follow the MACD. Now this was the area where this confusion happened. So you don't know whether price will break down or break out. Luckily for the bulls, this resulted in a price breakout. In this chart, we use traditional indicators and moving averages, but these were not able to convince us to get into the trade because they had conflicting signals. We did not know which signals were stronger. We could not predict the future sentiment of MCP using those indicators. So you missed out on the entire trade. Now let's take a look at the same period on the MCP chart using Ichimoku. You bought here. This was the level we highlighted earlier in the previous chart. You got stuck in this box. You sold here and you got whipsawed, but you hesitated here. Again, we're referring to the previous chart, but we are only putting the prices in using the Ichimoku chart. Then you hate yourself from here all the way to 820. So you hate yourself even more. Now, in number 1, you bought here, but the Chikou span could have told you to sell because it made a bearish crossover below the price. You see that Chikou span breaking below the price? You got stuck in this box, but the Chikou span made lower highs and could have told you that the current trend is sideways. Notice the Chikou span making a lower high. Now in number 3, you sold here, but the Chikou span made higher highs and could have told you that this is a real breakout. Now you hesitated here, but the Tenkan-sen crossover above the Kumo could have told you that this is a strong bullish signal. Now you hesitated here. I'm sorry, in the previous, in number 3, You sold here. The Tenkan-sen crossover was below the Kumo, but this was still a bullish signal. Though it's not a strong bullish signal, it's a weak bullish signal. In number 4, you hesitated, but the Kumo twist could have told you ahead of time that the sentiment is now bullish. This Kumo told you that the bullish hidden divergence was stronger than the bearish divergence that you saw in the previous chart. So there's no conflict here. There's a clear twist in the Kumo. In number 5, you hate yourself here all the way to 820, but the Kijun-sen served as strong support and could have told you that this is medium-term bullish. Price held above the Kijun-sen, price held above the Tenkan-sen, showing strong momentum, medium and short term. Do you see the difference between using moving averages and using Ichimoku charts? So had you known how to use the Ichimoku chart from the start, you would have avoided all the drama that came with not knowing what the market would do. Now, Ichimoku tells you the following things. First, the current trend. Second, the boxed area is the same consolidation box in the traditional chart shown earlier. In Ichimoku, this range is defined by the Chikou span, the green line. The second is a trigger for the change in trend or the future trend. The Chikou span breakout and the Tenkan-sen Kijun-sen crossover above the Kumo told you the change in trend. Third, this is for number 2. The trigger for the change in trend is a breakout in the TK-KJ crossover. 3, the likely timing of the future trend is shown by the Kumo twist. It also gave you the timing. If you look below, you would know that the timing for that uptrend is in late February. 4, the strength of the trend that followed is indicated by the Tenkan-sen and the Kijun-sen support line. So Ichimoku is able to give you a roadmap for future prices as well as the timing for the change in trend. It lets you prepare so that you are able to accumulate shares as the Ichimoku signals become more favorable, and you're also able to hold on to your shares when the market is about to go your way. So Ichimoku users do not simply react to crossovers made by moving averages or signals given by indicators like the MACD or the RSI. Ichimoku users are able to plan ahead and find trades that are likely to bring profits based on the strength of the signals on the Ichimoku chart. Let's go to the next chart. Let's dig deeper into the signals that led us to believe that MCP would trend strongly as it did for the past month. So I will draw the box just to show you which part of the trend we talked about in the previous slide. But in Ichimoku, we don't draw boxes. We use the Chikou span line as our range highs and lows. Within the consolidation, we see that price had been consolidating above the Kumo. Price had been trending above the Kumo. However, the Chikou span tells us that it was in a sideways trend because it was stuck between this range. Now, when the Chikou span finally broke out of its range, we know that the trend is about to shift from sideways to up. The Chikou span represents prices 26 periods back, so we count forward to know at what price MCP was when the Chikou span crossover happened. This was the candlestick 1, we count 26 forward. Now this candlestick was what told us that this was going to be a valid breakout. Notice that this price level is still inside the box because there's a long wick to the left. So we are able to position ahead of other breakout traders because we get a confirmation from the Chikou span. However, note that this was a failed breakout because Chikou span went inside the range, but it finally was able to bounce back. It just retested its previous resistance as new support. So this was this breakout candle that corresponded to that Chikou span breakout. Not only did the Chikou span tell you that the breakout will occur, the Kumo twist also tells you that the new trend is about to begin. Now let's go to the candlestick that corresponds to the Chikou span. Sorry, to the Kumo twist. Now we have the bearish sentiment. After the Kumo twist, we have a bullish sentiment. Now corresponding Kumo twist, we count 26 periods back. This was one. Sorry, let's go back. I have to load them all over again just to show you where the Kumo twist happened and what price level we're talking about. So this Kumo twist happened at this price level. That was the same bar, that number 26 bar. That same bar that signaled the Chikou span breakout was the same bar that started the Kumo twist. Since it made higher highs, price made higher highs, then the Senkou span A, which is computed as the average prices over the past 26, average of the high and low for the past 26 days, tends to shift upward because you now have a new high. Because the Senkou span is based on the highest and the lowest for the past 26 periods. So if you get a breakout, it gets a new high to use in its computation, which results in a sloping up of the Senkou A. Now let's do a case study on Phoenix Petroleum, or PNX. What are the factors that would have told us that PNX would move in this manner? It moved strongly from near the 5 peso area up to the 10 peso area. There were several Ichimoku signals that told us that this would happen. What are these conditions for the successful breakout of PNX? First was the Tenkan-sen crossover. The second was the Kijun-sen crossover. The third was the Chikou span crossover. The fourth was the Kumo breakout. The fifth was the Kumo twist. Now we look at the price where the Kumo twist happened. We count 26 periods back. We find that the Kumo twist occurred at the same time that the price crossed to around 590. Notice that while the prices were still at its lows at around the 580 or 590 area, the Kumo twist already warned of a change in sentiment from bearish to bullish. So you would have been able to speculate on this because all 5 signals were present on the chart. Since the Kumo is plotted 26 periods ahead, it would have warned us of the possible strong price breakout that followed. After that strong run up to 7 pesos, prices consolidated once again. Notice how price was stuck between the Chikou span lines. The Chikou span line created a price range that served as support and resistance lines. and then price broke above its range, the Chikou span also made higher highs. Prices consolidated once again, and then another breakout followed. Next, let's do a case study on MRC. The same elements that are found in the PNX breakout are also found in the MRC chart before its strong uptrend. These are the conditions for a successful bullish breakout. First, the Kumo twist. This Kumo twist happened when the price was at 152. Second, you have the Kumo breakout. 3, the Chikou span crossover. 4, the Kijun-sen crossover, or the price crossover above the Kijun-sen. The 5th, the Tenkan-sen crossover above the Kijun-sen. After that breakout, price consolidated within a range, and then prices broke out once again. Then prices consolidated within a range once again, and then another breakout happened. Now our next case study is on ICT. In this chart, ICT is in an uptrend. A Kumo twist happened at 75.20. And then a Kumo breakout. A Chikou span crossover above the price. A Kijun-sen crossover. And a Tenkan-sen crossover above the Kijun-sen. Prices consolidated within a range after that breakout, and then made another breakout to the upside. Now let's talk about BHI. BHI also made a successful bullish breakout. What are these elements? There's a Kumo twist that happened at 0.72. Next, there was a Kumo breakout. And then a Chikou span crossover. A Kijun-sen crossover. And then a Tenkan-sen crossover. Now the crossovers that happened above the Kumo are strong bullish signals. Now, a weak bearish signal also occurred above the Kumo. This was the break or the cross of the Tenkan-sen below the Kijun-sen. Since price is still above the Kumo, then this is a weak bearish signal. Now let's do another case study on Annie. Annie is currently making a strong uptrend as well. These are the conditions for the successful breakout of Annie. First, there was a Kumo twist. Second, there was a Kumo breakout. Third, there was a Chikou span crossover. Fourth, there was a Kijun-sen crossover, but that happened below the Kumo, so it's a weak Kijun-sen crossover. The fifth is a Tenkan-sen crossover that happened below the Kumo as well. Nonetheless, price was able to trend from the time the signals were provided at around 4 pesos. Price had now doubled to 8 pesos. Now, another example of a successful breakout is CPM. We find the same elements. First, we have the Kumo twist. Second, we have the price break above the Kumo. Third, the Chikou span crossover. Fourth, the Kijun-sen crossover. Fifth, the Tenkan-sen crossover above the Kijun-sen. The signals that happen below the Kumo are weak bullish signals. The signals that happen above the Kumo are strong bullish signals. Prices trended strongly and then is now inside a price range. The Chikou span is currently moving sideways and is unable to break above its previous high. It is unable. The Chikou span is currently moving sideways and is unable to break above prices, therefore showing continued consolidation or sideways movement. This next case study is on 80. This shows a bearish scenario. What are the conditions for a successful bearish breakout? First, the Kumo twist. The bullish Kumo turned into a bearish Kumo. The Senkou A went below the Senkou B. Second, the price broke below the Kumo. Third, the Chikou span broke below price. Fourth, the price broke below the Kijun-sen. Fifth, the Tenkan-sen broke below the Kijun-sen. These are weak bearish signals because the prices were still above the Kumo. And these signals happened above the Kumo. Nonetheless, prices still managed to break below the Kumo, and now Atlas is trending down. Now let's do another case study on Felix Petroleum or PXP. As mentioned earlier, one of the great things about Ichimoku is that it could help you see into the future trend. This means that it is able to catch or predict the most profitable part of a trend before they happen. Now take a look at this Ichimoku chart for PXP. We see some bullish signs that tell us that PXP was about to explode in May 2016. There were 4 signs. The first was the Kumo twist in February 2016. The second was the Chikou span break above the price and the break above the Kumo. The third was the bullish Kumo 26 periods ahead. The fourth was a Tenkan-sen crossover above the Kijun-sen. After all these early warning signs, PXP price surged from 116 in January 2016 to 493 in May 2016. After that peak, Chikou span told us about the possible reversal. Chikou span broke below the prices. PXP prices also consolidated sideways. Eventually, prices broke below the Kumo and moved downward. Part 4, Trading Strategies. I'd like to show you how you could identify the maximum price potential of securities. At this point in our webinar, you already know how to identify potential winners and how to assess the strength of each Ichimoku signal. Logically, those with stronger bullish signals are more likely to be successful than those with weaker signals. Out of so many potential trades that you might be able to identify using the Ichimoku trading system, it would be useful for you to know which ones are worth your time and effort. This is the reason why you should be able to identify the maximum potential price targets. You want to be able to catch the meat of the trend and avoid selling too early. But knowing your potential selling point, you would be able to define your risk-reward scenario to determine if your trade is worthwhile. Note, however, that we are discussing the maximum price potentials, and sometimes prices fall or exceed estimates by a few ticks. Therefore, price targets are possibilities and not certainties. So let's talk about Lesson 1, Identifying Maximum Price Potential. To identify the maximum price targets, we use the monthly chart. We previously discussed that prices always tend to go back to equilibrium. What are these levels of equilibrium? 4 of the Ichimoku components are measures of equilibrium. The Tenkan-sen measures equilibrium for the past 9 periods. The Kijun-sen measures equilibrium for the past 26 periods. The Senkou A measures equilibrium between the Tenkan and the Kijun-sen for the past 26 periods. The Senkou B measures equilibrium over the past 52 periods. So what does this mean? Prices will tend to reattach or return to these lines to restore equilibrium. Therefore, these lines could serve as price targets. While they are also support levels, let us focus on these lines as resistances for this part of the lesson. Of all the Ichimoku lines, the strongest is the Senkou B line and is therefore your maximum price target in most cases, except when price breaks above that line too. If price is still below the Senkou B in the monthly chart, then that line serves as your price target. The Senkou B is often flat, and the flat Kumo, as we learned, is a magnet to price. Now let's take a look at this monthly chart for MRC. The Senkou B serves as its strong resistance and is therefore your potential target price. When price hit Senkou B at 48, it dropped back down. The Senkou B was moving downward as price moved up. The area where the price hit the Senkou B line served as resistance. Therefore, while your theoretical target price for MRC was at the highest level of the Senkou B, which is at around 60, this price target adjusts with the movement of price because the Senkou B is merely a reflection of price action. Price and Senkou B made contact near the 48 area and was rejected there. I would like to illustrate how prices reacted to each of our lines on the way to our price target. In number 1, the Tenkan-sen served as resistance, so price dropped back down after hitting that line. In number 2, price was rejected by the Kijun-sen and then dropped back down. In number 3, price broke above the Senkou span A. In number 4, price retested the Senkou span A as its new support. In number 5, price broke above the Tenkan-sen and the Kijun-sen. In number 6, price was supported by the Tenkan-sen and the Kijun-sen. So each Ichimoku line served as resistance on its way up. In MRC's case, the area where price and Senkou B meet is the target price. Now in this monthly chart of IS, the Kijun-sen is the strong resistance at the 43 level and is therefore your target price. Notice how price kissed that Kijun-sen level and then dropped back down. What is the price target in this bell chart? Now, price targets or resistances are areas and not specific prices. Therefore, in this example, we see that your price target lies within that rectangle. This is your target price range. If price breaks above the Senkou A, then the next resistance is the Senkou B near 480. Currently, the Senkou A is at 430. If broken, the next resistance is at 480. Now, on the way up, prices hit resistances. The first resistance that it hit was that Kijun-sen line. It was first rejected, and then prices were able to rebound and continued to move upwards. Now let's look at the next chart. We have Bloom. The target price for Bloom is near the Senkou B line at around 25. Again, realize that the Senkou B moves with the price, thus targets will adjust accordingly. Along the way, Bloom will meet resistances. The first resistance that Bloom met was the intersection between the Tenkan-sen and the Kijun-sen line near 13 pesos. After it hit that level, prices dropped back down. The next resistance after the rebound was the Senkou span A. It still is the current resistance. It is found at the 12 peso area. Here's another security. BSC monthly chart shows strong resistance at the 30 centavo area. This is where we find the confluence between the Tenkan-sen and the Kijun-sen line. These two lines are strong resistances because they are in the same area. So notice how BSC couldn't break above that. However, if price is able to break above that, we're in for a strong move for BSC. Now, on its way up, BSC encountered resistance at the Senkou B and then at the Senkou A. However, the price target is still at 30 cents, and if broken, we are in for a strong move upward. Now, MRP monthly chart shows the price target range between 11 to 12 pesos. Currently, price is having a hard time breaking above the Senkou A. However, if it is able to break above the Senkou A at 11 pesos, the next target would be at 12 pesos at the Senkou B line. Notice how Melco reacted to the Tenkan-sen and Kijun-sen lines. First, it broke above the Tenkan-sen line, and then prices attached to that line for a few months, for around 7 months. It trended upward, and then it broke above the Kijun-sen line also. And now it's being stopped at the Senkou A level. Brown, the price target is near the Senkou B at around 190. Currently, price is already inside the Kumo. It already broke the Senkou A resistance. Therefore, while prices could range within the Kumo, it is still on track to meet the Senkou B line near 190. Now, on its way up, it met resistances at the Kijun-sen and the Tenkan-sen, but now is able to use those levels as its new support. Now let's talk about Lesson 2, Trend Following. We have to follow the trend until it bends. So Ichimoku is the best possible system that you could use for trend following. After Agri-Nurture showed bullish signals, and after Chikou span was able to break above prices, Agri-Nurture had made strong moves upward. It is now traveling along its Tenkan-sen line. The Kijun-sen line is already very far from the Tenkan-sen line, so while you must exercise caution because there is this equilibrium between the Tenkan-sen and the Kijun-sen line, the fact that Agri-Nurture is able to stay above the Tenkan-sen line shows strong momentum. SMPH is also another strong uptrending security. Price is also trending above the Tenkan-sen line, showing strong momentum moving forward. As long as price is above the Tenkan-sen line, we have strong momentum. As long as price is above the Kijun-sen line, this is still medium-term bullish. Notice how price tried to break below the Tenkan-sen but immediately broke above it once again. SSI is another strongly trending security. It had been trending above its Tenkan-sen line since price broke above the Kumo at 244. To Go had also been trending above the Tenkan-sen line. However, last week, it broke below the Tenkan-sen line but was able to survive above the Kijun-sen line. Therefore, this is still in an uptrend. However, the momentum had already slowed because it closed below the Tenkan-sen line. Now, another trading strategy that you could use with Ichimoku is to do bounce plays. Now, after a strong run, the Kijun-sen and the Tenkan-sen will have a tendency to move away from each other. This means that there will be a large difference between the 9-day and the 26-day equilibrium. Now, when the Tenkan-sen line and the Kijun-sen line are far apart, there is a disequilibrium. Now, price always wants to have equilibrium. So if you have a market like this, one of two things can happen. Price will go down to force the Tenkan-sen and Kijun-sen to get closer, or the price moves sideways until the Kijun-sen is able to catch up. This is what happens in a correction. Now, this is a C-clamp. The C-clamp pattern is what you see in securities or in charts whose Tenkan-sen is separated or has a wide distance from the Kijun-sen. Take a look at this MRC chart. These C's are called the C-clamp patterns. The area where you find the letter C shows a disequilibrium between the Tenkan-sen and the Kijun-sen. When this happens, either a correction in price or in time occurs. In this particular example, the price corrected back down to meet the Kijun-sen. Price had been trending above the Tenkan-sen for the longest time. It eventually gave way to a correction in price. This correction in price helps restore equilibrium in the market. Now, in a C-clamp pattern, not only is there a wide distance between the Tenkan-sen and the Kijun-sen, if you look to the right, there's also a wide distance between the Senkou A and the Senkou B line. If you find these C-clamp patterns on a chart, you know that you're able to do bounce plays. Once price hits the target price at the Kijun-sen, you know that prices are also likely to bounce. Now, in this example of MPI, prices are trending downward. Therefore, the Tenkan-sen is below the Kijun-sen. Now, this is the opposite scenario. Previously, we see the Tenkan-sen was above the Kijun-sen. Right now, the Tenkan-sen is below the Kijun-sen. Because there's an extreme downtrend, prices had to bounce up to meet the Kijun-sen to restore equilibrium. Now, once that happened, the Tenkan-sen is above the Kijun-sen once again to the right. There's a disequilibrium once again. If you see that long wick that happened, the last long wick that touched 636 was another bounce play wherein the price touched the Kijun-sen and then closed at the Tenkan-sen line. Now, To Go also corrected when the C-clamp pattern appeared. There was a huge distance between the Tenkan-sen and the Kijun-sen. Therefore, prices had to restore equilibrium. Prices dropped back to the Kijun-sen to restore equilibrium. Now, what are some potential bullish setups that we find? First, we have CEI. The Chikou span of CEI had broken above the price. There is already a Kumo twist. Price is already above the Kijun-sen. Currently, the Tenkan-sen is below the Kijun-sen. Once the Tenkan-sen is able to cross above the Kijun-sen, then our signals are complete. This would be in for a strong uptrend. Agri-nurture, as discussed earlier, had already met all the conditions for a successful breakout. Currently, it is trending strongly, so just follow the Tenkan-sen line. If prices drop back to the below the Tenkan-sen line, then you know that it needs to restore equilibrium until the Kijun-sen line is able to catch up with the Tenkan-sen line. SSI is also doing a strong uptrend. There's a Kumo breakout. There's a Chikou span breakout. There's a Kumo twist. There's a Tenkan-sen crossover above the Kijun-sen. SSI is currently trending strongly above the Tenkan-sen line. Wilcon is another security that is showing a strong trend. We have those same bullish factors in the Wilcon chart that we identified earlier. So do you have any questions? If you have any questions, kindly send me a message. If you do not want to ask your questions here, you can send me a message through email at simple_trades@yahoo.com.ph. So thank you very much and see you next week. Goodbye.